Hey, what's going on, everybody? FeedbackWrench. I'm Rob, and this is all about entrepreneurship, keeping more of your money, and we want to help maximize your efforts as an entrepreneur. Hey, if you're a real estate agent that earns 1099 income, if you're a realtor, there are some things you can do to mitigate your taxes in a big way. And in this video, I want to explain to you the three major things that you can do to reduce your taxes. What are the biggest tax deductions, or what is it that can impact your taxes in the biggest way? Real estate agents, you hustle, you work hard, but you're also your own little business, right? So I want to dive into what are the actual meaningful write-offs or meaningful tax things that you can do to help pay your fair share, but not a penny more. And before I get started here, I want you to know, talk to a tax professional. If you don't have a great accountant, CPA, bookkeeper, or tax program, check out Xendoo, Z-E-N or X-E-N-D-O-O. I've got a link in the description. I've got an affiliate relationship with them, but they have a program where for just a couple $100 a month, they'll do all your bookkeeping for you, supply you with payroll if you become an escort. We'll get into that. And they'll do your tax returns for you, and they are awesome. Check them out. But here's what I want you to know is you need to bring great tax mitigation ideas to your CPA or to your tax accountant. You need to be informed, because anybody that's doing your taxes, when they're actually looking at your documents, they are so busy. There's a compressed season when a tax professional can actually do their work. And what that does is all they're doing is trying to make sure that everything's filled out correctly, that their paperwork's done right. They are not doing this kind of blue sky thinking where they're thinking of ways to help you mitigate your taxes. They don't really have the time to look at your entire financial situation. So no matter what, you need to take it upon yourself to come up with some ideas, and that's what this is meant to be. Here are three ideas that you can really move the needle on your taxes, and these are big, meaningful things. Another tip before I dive into this is that when people are telling you that there's certain write-offs that are so big and so massive that you ought to be doing them, I would tell you, be really careful, because any tax write-off you do needs to be an actual investment that you made to produce profit, but it means that you spent money. I'm going to talk to you about tactics to reduce your taxes that aren't like go and buy a new car and make sure that it's over 6 tons so you get a bigger bonus depreciation. That's great, but you still spent money that you might not have spent anyways, right? Vehicles are a great tax deduction thing, but that's not what I'm going to touch on. These are bona fide ways to mitigate your taxes that will help you build wealth. Okay, so I'm going to talk about three of them here. The first one is if you make net profits north of about $40,000, so that's your net profit, consider becoming an S-corp. Now check out our video. This whole YouTube channel is really all about, it got started by teaching people how to be an S-corp, but here's the principle. When you first start out, your tax is a sole proprietor. If you become an LLC, that's a legal entity. You can be an LLC taxed as a sole proprietor, or an LLC that they incorporate and do an S election, and you become an LLC taxed as an S corp. Now, an S corp is a great way for you to reduce what's called your self-employment taxes. Okay, bear with me. I'm going to go really fast. Right now, if you made $100,000 and you had $40,000 worth of write-offs, you have $60,000 of net profit in your business. That's $60K as a sole proprietor, not an S-corp, sole proprietor. You're going to owe 15.3%, which is self-employment taxes on that right off the bat. Then you're going to have federal income tax, and then if you live in a state income tax, you're going to pay that tax. 100% of your net profit up to the Social Security limits of about $128, you're going to pay 15.3%, which is SE, which is Social Security and Medicare, and then state and federal. If you convert to be an S-corp, what will happen is you will go from just having this Schedule C, where it's all like that, to having a corporation, and you have two forms of income now. On one side, you're going to have your corporation pay you a reasonable salary, and then you have what's called the dividend or the distribution. Now, real quick, all of your income that actually flows through is going to be taxed at the federal and state level. You're going to pay state and federal income taxes. But when you become an S-corp, you could take that $60,000 and you'd pay a portion as a payroll. And that's like you're giving yourself a W-2 in a way, or it is. You have to use a payroll system to pay yourself a reasonable salary for what you do. And that is subject to the 15.3 self-employment tax. But then the dividend or distribution is not. So depending on how you split that up, we've heard if you made $60,000, maybe you would only pay a realtor, you have to determine a reasonable salary, and we've heard all sorts of stuff. A lot of people are saying make sure that your salary is never less than 33% or a third. So there's people out there only taking a third of their net profit. I don't know, but the bottom line is when you split that, if it was 50-50 or 60, you have to make that decision. But that distribution, you save 15.3%. I've seen cases where if you're making 110,000, 128 and under, if you're making that net, you can have massive tax savings, $5,000 to $10,000 in self-employment taxes possibly. Besides that, then remember we've got the new Tax Cuts and GOP law where you have this 20% deduction on your personal taxes from the business income. On an escort, it's the whole, or on a sole proprietor, it's the whole thing. So that can be bigger. That 20% new write-off is bigger in a sole prop. On an escort, it's less. So you kind of have to do some decision making here. But I'm telling you, if you're a real estate agent that's making north of about $45,000, you want to consider an escort. Find out if it makes sense for you to be an escort because you can have massive self-employment tax reductions. That's the first thing. The second thing, I want you to look at retirement plans. Primarily, if it's just you, there's a solo 401k from Vanguard.com. They don't pay me anything, no affiliation. I just know it's the best product out there. Solo 401k from Vanguard allows you to do up to 25% of your payroll in an S-Corp plus a regular 401k contribution. Long story short, the solo 401k is great if you're by yourself and you have no statutory employees. Statutory employee is only somebody that's not in your family. So if it's you and your spouse, look at a solo 401k. That solo 401k has amazing investment opportunity, but you get to, what's so good about it is you have this profit share side where you can do up to 20% and put it in there. That profit share is a straight write-off in the business. It's called an employer contribution. Then you have the employee contribution. Employee contributions are just like a regular 401k that you would have done when you're somebody else, but that employer contribution is very tax efficient. You're essentially not paying self-employment taxes on that. You're essentially doing a straight write-off in the business. And then on the employee, that's employer. On the employee side, you can do up to $18,000, or you have catch up if you're older, but $18,000, and you can't go over what your payroll is, but long story short, you can do it all in Roth if you wanted to, which is non-deductible, or you could do a traditional that would reduce your taxes. So if you're by yourself, look at these retirement plans. A solo 401k, if you have no statutory employees, is great. You could do a SEP IRA where all you're doing is an employer contribution. There's no employee. You can do up to 25% of your Schedule C or 25% on the payroll side, and that can be a contribution that the business makes. Those are great options. You also have simple IRAs if you have employees, you want to keep it simple. But take a look at those. Those are super tax efficient dollars. I really like Vanguard.com when you're doing those because their fees are really low. So that's the second thing. First, look at an S-Corp. Second, look at the retirement plans. And third, take a look in getting involved in real estate investing. You're a realtor. You don't have to pay a lot of the transaction costs that other people would have to. So I tell you what, look at owning duplexes, triplexes, and quads, or look at getting your own office. Here's the bottom line. When you create jobs, you get a ton of tax write-offs. That's what a lot of the S-Corp stuff, you get great benefits by doing that. On the other side, if you create housing and offices or development, you get amazing tax reduction tools. So by owning a property that you would rent out to somebody else, a couple of things that are really attractive to a realtor is, first of all, if you were to create paper losses in a commercial building, or it's usually a more complex rental building that you would have, you're a professional and you get some additional tax write-offs. That's the first thing. The second, and that's if you create losses. You have to create losses. Hopefully you're not, but you can on paper. The second thing is you have depreciation against that income, very tax advantage. And then the third thing is there's some bonus, or there's the participation of being, it's like another business that you're running. You can create income. So that's not really easy to get involved in, but those are the three levers of really good tax planning. Managing your corporation status, particularly looking at an S-Corp when you have wages that are subject to self-employment tax, looking at retirement plans and benefits. There's a whole other thing that you can do with healthcare. There's a whole bunch of stuff you can do with pensions. If you start having really high income as a realtor, There are pension plans that you can get where you can deduct up to like $200 and some odd $1,000 a year in deductible, reduce your taxes stuff. But look at retirement plans, particularly the solo 401k, SEP, and Simples. And then the last thing would be get participating in real estate investing. I tell you what, that'll help you mitigate your taxes as a realtor. That'll move the needle in a huge degree. Hope that's helpful.